Hey investors, Dave Hathaway. Welcome back to the channel. We discuss real estate investing and building wealth. Today we're going to do a video in our deal day series. We look at a new market and a new property each week to determine if it makes sense as an investment property. This week we are going to Austin, Texas, which is a super hot market. There is lots of articles that discuss how Austin is one of the fastest growing markets in the US. And not only it's hot, because it is freezing here in Northern Virginia where I live. It is 17 degrees as of this morning, 2-hour delay, school delays. But let's get into the market of Austin, Texas. The property we're going to look at is 113 Nolan River Road, Huda, Texas 78634. And investors, if you like this kind of content, if you find value from these deal day series or any of the videos on our channel, we'd be honored and appreciate if you give us a thank you by hitting the thumbs up and subscribing to the channel so we can help you be a better investor. So diving into the market fundamentals of Austin, it has a population of 966,292. It has a growth rate of 0.11%. So it hasn't been growing super fast recently, but if you look at the graph, it has had a big influx of people over the past 20 years. Job growth is at 4.4%, which is great. Unemployment is 3.9%, which is the national average. That's fine. Average salaries are $52,000, which is fine. Median sales price of homes is $525,000. That is high, and that's because this is a hot market. And the average days on market for those properties are 70 days. So this market has actually come off of its hot streak. It's plus 14 days year over year. And what that means is a year ago, it took properties on average 14 less days to sell. So 70 days on market is actually a long time. So the market has cooled off a ton. That's a little bit of a red flag there. Median rent in Austin is $2,121, and that's minus $274 year over year. So again, it must have been super high in demand a year ago, and it has come off that demand. And the price to rent ratio, which is another stat we're going to add, is 20.62. Really good markets are really good cash flowing investment markets are at 15. So this is a bit high. Overall, I'm going to give the market a thumbs up. You just have to be careful because Austin's been so hot for so long. But luckily, it looks like there might be some breathing room for investors or just normal home buyers to purchase properties here in the market. Moving on to the Google Street View test, you're going to see just open fields and new construction houses. The property that we're choosing today is a new construction property. So there's not too much to look at. You're not going to see trash. You're not going to see people hanging out because this is a completely new neighborhood. So we're going to give it a thumbs up on the Google Street View. All right, next up are the listing details of this property. It's listed for $341,000. It's a 3-bedroom, 2-bathroom. It's a single family home with a nice 2-car garage, and it has 1,465 square feet, and it was built in 2024. So this is just fresh new construction home. You don't have any rehab here. You're going to have no rehab on a new construction home. The only thing I would suggest if you're going to rent it out is putting hardware on the kitchen cabinets. It's going to save your kitchen cabinets from getting worn out, from getting lots of dirt, grease, debris on your kitchen cabinets. It gives them an extra, 5-6 years. And again, if you look at all the pictures, this is just nice. Got nice backsplash, got nice granite countertops, nice stainless steel appliances. This is anything anybody would want to rent in a home. For rehab budget here, it's going to be $0. Moving along to the deal analyzer, which you can download below. Just click on the link in the description. Zillow states that rents are about $3,200, which is really high, but this is a centrally located house. I'm going to tend to just agree with that. Property taxes are high. They are $5,126, which I was actually expecting to be a little bit lower, to be honest. Being in a Texas market because they have lower property taxes normally. Cash flow on a property, if you purchased it with all cash, is going to be $2,093.83 or a 7.17% return. Again, not amazing, but this is pretty good. A 7% return is decent. If you were to put a 30-year fixed loan on the property and you got a rate of 7.35%, you'd be getting a return of $293.71, or about 4.02%. So you are making money on this property. If the property just appreciates at a very lowly 1% a year, you're gonna make 8% a year on the property. I'm gonna go ahead and bless this property as a great investment. I'm gonna bless it as a long-term rental. If you can get that rate even further down with the 3 interest rate cuts that are coming here in 2024. So maybe you get that property in the low 6s or maybe even the high 5s. I think you got a killer investment that's gonna make you a ton of money in the future. So I'm gonna go ahead and market gets a thumbs up, property gets a thumbs up, overall great property, and I'm excited. Tell us what you guys think, leave comments below. I'll see you on the next Deal Day video.